Good morning. Jeremy PC, can you tell me if you hear me? Can you hear me? Do a quick comms check. All right. Can anybody hear me? Hello? Morning, Matt. Morning, Andy. Andreas. Wes. Jeremy. Audio good? Thank you. All right, moving on. So yesterday, I shared to all members and all followers this layout, right? In this layout, you have, what I'm going to do is I'm going to do all of my lines on this layout. And this layout has the ability, if you leave it open without making a copy, you'll see the adjustments I make based off of what price is doing for that day, right? So you have to hit refresh and it will populate the adjustments. That was confirmed yesterday. So if I draw a bunch of stuff on there, right, and it populates because you got the layout in your layout, and then I make a change to the stuff like that, then what it will do, you have to hit refresh to see that. I don't make too many adjustments each day, besides, like, if something dominant happens, like we make a big signature, then it'll adjust my thought process, especially during the opening. Why is this important, right? Because like I tell you, the further out you try to predict using statistics, the larger the error rate will go. Error rate for being wrong. Because, at this point of prediction, right, you're dealing with this many variables. And the farther out you go, multiple variables are playing into factor, right? You saw yesterday how, like, above London, below London, engulfing London, like, those are three variables alone that only New York could have given us. They all had probabilities, and based off of which one they did, which levels they respected, determined that. All right. So moving on, let's start the process. All right. Take out previous month's highs yesterday, right? Above 50%, previous month 50%, we are above NMP Friday. We expect lows of the days to be formed between 5 and 11. Moving to the weekly chart. Weekly chart. We're above. Holy shit, we went exactly to it. We went, Jesus. Wow, okay. Crazy. All right, we still have some room for this week you get up to, but we hit target. So we are looking for the weeks to start slowing down or possibly reverse. Probably not so much a reverse, because of the fact that we're above previous month 50% in FP Friday, right? We're expecting this to trend and for us to end the month higher, right? We just know that we're above the 2.5 to 5 when that range right now, so we can start expecting a slowdown. All right, looking at this, we put the low of the weekend on this low of the day at 15:30 on Wednesday. All right, and then we instantly recovered it. So we can expect that the low of the week is in. Time-based statistics we'll put on our charts. We do 3 of them. We do midnight. Make sure you change this to New York. All right. So now where did a midnight go? Right there. Clone it. We're doing 1800. Globex open. And we'll do settlement, which is at 16:15. Make sure that your session time resolution is on the 15-minute. And your chart's on the 15-minute too. Okay. Now what we're going to do is we will pull up the probabilities and do our structure-based probabilities, which is going to be the highest high, which or either this one or this one is relative equal highs right here. Actually, it's the 1800. Give me a second. Let me fix this. There we go. It's at 20.073. And since that is at 1800, it's got an 87. And we'll put in a second one. Okay, and so far this is at 4:30. and this is 81. All right. So Asia went long to go short in a false day. So let's put in our projection-based probabilities now. And right now, what I'm doing, right, is I'm collecting every single probability for the 15-minute, the 10-minute, the 5-minute, and all the sessions, right? And then I'm going to give the select times that we want to measure this to the coder. And then once the code is complete, you'll have the ability to, customize these ranges yourself, figure out if, sorry about that, I heard noise outside. Figure out if, yeah, you have the ability to do this without a database. They say, Asia did this, London did this, what is the probability of where New York's going to be? And then it'll give you the projected probabilities as well. I'm working with a coder for that. And the first step of that is me pulling all the data to make sure that we're using the right time frame. Come on, little friend. But for now, I'm using this database to do that. And since it doesn't belong to me, I can't just give it out for free. So I'll just build my own. All right, so we know that Asia, long, pause. Did we break the Asia mid between 2 and 3? We sure did. So that is a factor that we're going to put in. London went short. So this is the 3 to 4 range. We went short. We're confirming that short right now. And so now we're going to write out our scenarios. So scenario 1 is that this high stays intact. All right. Issue with this high staying intact, doesn't matter what it looks like we're doing right now, right? These are relative equal highs right above a 87% probability of being returned to. Globex open, 70% settlement, 66% midnight, 75%. Good clue right now. With this 12-hour period, we're rejecting the midpoint right now. But because of these probabilities, we had to incorporate the second scenario, which is going to be scenario 2, where those get taken out. All right, so New York, 9:30 to all right, so saying below London highs engulfing London and above London. Right, so being above London has 19, 26, 30%. Engulfing London has a 9% with this scenario. Staying below London's highs, 41, 51, 59. All right, so that is scenario 1. Scenario 2, what the fuck is going on with my spelling? If this scenario plays out, 1030 has a 58% short and a 38% long. Now, we're going to incorporate that the London's highs get breached by 9:30, right? So we'll put that variable in. And New York, 9:30 to 10:30, probabilities, staying below London highs during the 9:30 to 10:30. Has a 45% engulfing during the 9:30 to 10:30, engulfing London has a 5%, and being above has a 44. And then 10:30 to 10:30 on is a 64% short and a 36 long. So now we're going to put that over here. Now we're going to take a regular fib. Nope, that's not a fib. Shows you how much I use these things. There it is. We're going to do 1, -2, 2.5, 5, 8, -3.5, -6, -9. Okay, now we're going to put our probabilities in. This one has a 95. Let's put the numbers in. And this has 95%. This one has an 86%. To the upside. %. Correction. This one actually has a 77%. And then to take out previous day's lows, has a 36%. All right. So now looking at that, So now we see that previous day midpoint has a 95% probability of being touched today. Right below it has an 86. So once we get to this previous day midpoint, we're going to pay attention, right? Because this could be an important signature. Do we head lower, or do we reverse and go higher and establish the low of the day? So we're expecting the net of the day, low of the day, to come between these two probabilities, right? And if it's very eager, we can go all the way down to the 19755, right? Right here, we're going to pay attention to what price is doing. Been up since 3 a.m. and lost track of captain time. Good morning. Good morning, Jerry. Okay. So the probability of us taking previous day's highs is 41%. Previous day's low is 36%. All because we had such a large range. Well, we didn't have a large range. We had an above average range day yesterday, right? And we have news at 8:30 that will show the hand, right, of which one of these scenarios is going to actually play out, right? Right now it's about to be 6 o'clock, and we're at structure stat 1, right at the bottom of it, right? All right, so now we're going to put our vet indicator on. We're going to look, we still have 40% of the current weekly range left open. Do you think we're going to move all the way down to the low of the week to fulfill that, or we're going to go higher to fulfill that? This is the kind of thought process you have to have. The average 8-week range is 1,095, and that's with some of these more choppier consolidated days that can even make it to the average daily range, right? So out of the last 8 weeks, on average, it moved 1,095 handles, right? We've only moved 671 this week. So we're looking, and we know based off of where we are in relationship to previous month 50% and NFP Friday, our expectations is that we're looking for the low of the day during the New York, right? All right, so average daily range is 393. We're currently at 67, 17%, right? Yesterday we were at 99% at this time. Today we're at 67%. That's how the market is. That's why you have a repeatable structure. So you can see those different signatures. You have a repeatable workflow process. Where is my price measuring tool? Right there. So 393. Let's move this up. All right, so we can see on Fridays, let me fix this because I had it set up on my other layout. Four to eight, 8 to 12. Cool. All right, sorry, I zoned out. All right, so Fridays from 4 to 8 usually get 73 handles. And that's out of the last 46 Fridays. All right, from 8 to 12, we usually move 209 handles. All right, from 12 to 16, we usually move, on average, over the last 45 Fridays, we move 137 handles. All right, so now we have that. We haven't even moved 73 handles all night. Shoot. You can turn this off. From 4 to 8. All right. So now from 8 to 12, we know that these are the probabilities. And in each scenario, in scenario 1, being below London highs completely beat out engulfing London and being above London by a whole 29%, right? So 59, 30, 29%, right? Scenario 2, where we breach this midline between London's midline between 8:30 and 9:30, or we have a false day where we take out the highs between now and 8. Jeremy PC, I will explain that. Thank you for asking, but let me finish this part, right? If we do this scenario where we take out the midline, which we need to draw that midline in, this is the only one I want to be bright, obnoxious, and pink, because this is where statistics turn. London, OU. This would be the separator of what scenario we're going through. This midline in London, which is right there, right? So if we breach this pink line right here, right, between now and 9:30, right, that means scenario 2 is in place, and that the low of the day is possibly in, right? If we don't breach this, then we can expect, 1 minute, still haven't taken out structure stat 1. We're going to leave that right there. If we don't, then we have to go with scenario 1, where everything is pushing to the downside, right? So we'll put this like this, doing 8 and 12. Actually, anchor it on Globex Open. Yeah. Anchor it right there on that mid-London OU line. And this goes to 12 o'clock. And then from 12 to 1600 would look like this. But if we fail to take out this midline, right, or this London high, by 10:30, it means this is going to be like this the rest of the day. And even if we extend 4 to 8, 8 to 12, 12 to 16, and we say that the high of the day is right here, we barely can make it to the low of the previous day's low of the day with the average 10-day range, right? Meaning the news is going to come out and say at 8:30, and the market's not going to like it, and this thing is just going to parabolic trend day, right? Which I'm not sure how likely that is. It is jobs report, so maybe for now, anchor that like that. And based off of the weekly range, remember we still have 400 handles left on the weekly range, right? We expect right now this to take out these lows and reverse, right? And it would be like something like this. Something like this, right? And that's why you need to pay attention, right, to this midline. And then during the New York session, you've got to pay attention to that range, right, on the 10-minute. Let's do it for yesterday, right? So let's rewind. So you can do it on the 10-minute, a 5-minute, a 15-minute, right? I usually do it on a 5-minute, right? And I'll go to the 9:30 open, because remember, we have rank. Me and Austin Clark are currently doing how many times over the last 3 years that RTH had a trend day versus a move up, a V-shape, and puke day, right? Something like that, right? No, I'm not going to. Could you stream in higher quality next time? I don't even know what that means. I don't know how to do it. If you tell me how to do that with my settings, I would love to stream in higher quality, Jake from Safe Farm. So yeah, just DM me how to do that, and I'll make sure I do it. All right. So we know that majority of the times, just from our studies this year alone, right? Majority of the days in each month, we're ranging, aka having that V shape and puke kind of day during the RTH more times than when we're having trend days, right? So what we do, the first characteristic that we're testing right now is like you take a box at the open and you just follow it, right? With the midlines exposed, you just drag it down. And the moment we breach it like that, tells you don't expect to the video is in 720p. Today's standard is 1060. Our DM. Okay, so our DM as well. Let's see if I can do that right now. Oh yeah, it's right here under settings. Quality selection disabled while on live. Thank you for bringing that to my attention. Want full high definition quality upgrade now. Thanks, Jake. You just added another bill to me. Now I have to upgrade just to get the 1080p. I'll do that though, because it can be frustrating, and definitely can be frustrating not to be able to like everything be fuzzy. That's annoying as hell in this. I didn't even know. So thank you for the feedback, dude. Or do that, whatever. You never know nowadays. So yeah, like the first characteristic that I'm back testing right now is the moment that we breach that midline. Number one, full HD. Yeah. Hey, listen, if you're gonna be a bear, be a grizzly bear. Don't be a care bear. You go full retard. I won't say that. That's probably not right. It's even though it's humor, it's still not right. The saying in public settings. All right. So, like the moment you breach that midline, perfect. The moment you breach this midline on the 5-minute chart, your expectations have to shift. It doesn't mean we're not going to go lower. It just means that the market's already 10 minutes into the RTH showing signs of weakness by breaching that midpoint, meaning that it's not going to be a strong trend day, right? And so that's the first characteristic. And once we get done with that test, we'll definitely share the results. All right. So now going back to this. Wait, can I change it right here? I see the 720p now that you mentioned it. But anyway, all right, back to this. So let's say, let's do some scenario prep, right? Let's say we come down to here by 8:30, by 9 o'clock, right? By 9:30, right? And we're making, and at 9:30, we start coming back up, right? This is a 9:30 candle. Then on the 15-minute, we're going to be measuring it, right? We're also going to be paying attention to this right here, all these probabilities, to see if we get a response from there. And then if we reject and we net in this area, and then we breach the midline, we expect lower until that midline is fully taken over, right? All right. So we also have the live price portion chart, right? Right, with these 5-9 boxes. So for example, we just took out structure stat 1. All right. And this had an 81% probability, right? Right. This is the 12-hour low and the probability on the 12-hour low, right? So now, what are these 5-9 boxes designed to do? What's the whole purpose of them? Right. The whole purpose of them is to identify the market condition that we are in, right? Are we in a ranging market? Are we in a trending market? Right here is a perfect example of a ranging market, right? Because if we understand the market condition that we're in, then we understand the type of risk profile we should have, right? And in a ranging market, the risk profile that you should have is identify the range. Well, number one, how do you identify that we're in a ranging, consolidating, building value area? You know, whatever lingo you want to use for it. Thank you, Jake. You already make my you made my day with that comment. Before we go into that, I need to answer Jeremy's question because he did ask. Going to the vet, what does this over here? You see the hit plus and minus ADR, 41 over 31. So this is measuring 15 weeks, right? And so what this is saying is that out of that 15 weeks, the high of the day of the ADR hit 41% of the time. The low of the day ADR hit 31% of the time, meaning this green line being the high hit 41%. This green line low hit 31% out of the last 15 weeks. Same thing with the weekly. This red line, which is the weekly ADR high, has hit 46%. This low red of the weekly range hit 53%. Does that make sense, Jeremy? And then obviously you have the ability to customize these probability levels and tailor it wherever you are, wherever you need it to be. Right, so let's do it real quick. Let's say we're going to anchor it off of this last hour. Right, we go to the vet, we go to Friday, we go to 05 0.06, right? And then we want to see these relative equal highs right here, right? What's the probability of them being hit? We're going to take our standard deviation, let's erase them all, and we'll put a 1.4, and we're going to try to line that up with these relative equal highs, right there. We can bring it down because it's not exactly on them, right? And need to bring it down a little bit more. And we can see that 1.2 has an 87% probability of being touched. And even if it comes and touches this negative 1.2, it still has an 80% probability of being touched. Next level touch, like if we put in multiple standard deviations, so we'll do 1, 2.5. I don't know why I had you guys draw a fib when I could have just had you do this. 8, just like that, and then you would have had the probabilities behind it. All right, so now what this is telling you, let's do it off of Thursday, 1930 to 2030. All right. Damn, we haven't touched anything to either side yet. So that's a worse example. So let's lighten the load so I can walk you through this. Let's do 2030, 2000, 19 to 2000. There, we touched something. All right. So based off of this range, we've touched the 1 and the 2.5 probability lower. So now we look at the 2.5 because that's where we're currently at, and we can see there's a 92% probability of hitting this -5. There's a 84% probability of us hitting this 8, right? There's now a 86% probability of us hitting this 1, and there's a 100% probability out of the last 15 weeks of us hitting this 2.5 right here. Okay, Jeremy, hopefully that answers your question. Moving back to the live price portion of it. How are those ranges anchored from? You need to go more specific with that. Oh, I don't know. That's TFO, dude. Like TFO is that dude that did that. All right. So look, back to the live price portion. These are the hourly boxes with the 5.9. First and foremost, we can see midlines are pretty close together, except for this little booger, right? But the 5.9 boxes are going down, up, flat, 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 up. So you're identifying that you're in a range in market. So the moment you see that you're in this range in market, your risk profile should be, if you have a higher probability up here or a higher probability down here, right? Your job is to say, where is the higher probability? So when we break out of the range, what do I think the highest probable area that price is going to go to? And you only trade that side of the range, right? So we'll say that in this case, damn it, right? We had structure stat 1 and structure stat 2, right? Not a great scenario because we're so close to both, right? So those probably wouldn't be great examples. But let's say we went with the higher probability structure stat, which is 87%, right? Our job is the moment we step below these 5.9 boxes, right? And we do stuff like this where we couldn't take out previous hour low. We stepped above the 5.9 box. We came back. I'd be buying, let's say we have to engage 10 micro contracts within our trades, right? All 10 would be getting smacked right there. I'd be targeting this previous hour mid because when in range of market, I don't know the definition of where we're going within this range of market, right? Same thing right here, right? Like we stepped above, we came below, we stepped back above, we found footing on the midline area. So I could take a long here. I could be targeting this high. Like you're shooting for low hanging fruit within the previous hour, right? Because that's what kind of market we're in, right? If we're in a reversal market, which we currently are, like let's say this is a perfect example. So within a consolidation, you're shooting all 10 contracts at once. You're targeting low-hanging fruit from the previous hour, right? And you're keeping that risk to reward really tight because that's what kind of market you're in. When you hit a higher probability statistic like this, right, structure stat 1, the low of the 8-hour cycle, and you think there's going to be a reversal, and you see a step above, but like this doesn't even qualify because we're still below previous hour mid, right? But let's pretend like previous hour mid is this blue, like right here, right? Let's say this is previous hour mid. We hit the higher time frame probability. We step above the 5-9 box and we're finding footing on it, right? Now we're trying to capture a daily range or a 4-hour range, right? We're not worried about previous hour. We're shooting for the daily range, right? We're going to start a starter position here. Remember, we have 10 micro contracts. We'll incorporate 2 micros right here. And then in the next hour, we expect to be above this previous hour midpoint. And then we're waiting for 5-9 box to develop. And we're waiting for it to support and show that we're in a trending market now. We add 4. And then we add the rest on the next hour and then we scale them off the closer we get to that higher probability trend stat. Right, so for example, yesterday was an example of a freaking trend day, right? So let's say that we identify that this, whatever this probability is, we'll say it's this BOR midline, the bond opening range midline, right? We'll say that this is the probability of a reversal that we were targeting, right? Right, this yellow dotted line was the probability of what we were targeting, right? We're not going to just sell right here. We're going to wait for it to show some kind of willingness to go higher in reverse, right? So we wait for that current hour's midpoint to get stepped above and that current hour 5-9 box to get stepped above and find footing of, right? And let's go to the micros. So we stepped above this hour's midpoint, which in relationship, like this is a new 30-minute, right? We go low, and now we're stepping above the previous 30 minutes midpoint, which is this yellow line, right? Haven't quite stepped above yet. Now we've stepped above. Now we expect footing, right? So let's say we'll start our starter position because we expect for this to be a reversal trend, right? Now the next hour opens up. Are we above previous hour midpoint? Yes, we are. We wait for the 5-9 box to develop. We went below. Oh, actually, we haven't even finished developing yet. All right, 5-9 box is still developing. This is 09, so now we're stepping above it. And can we find support on it? We can't. So now we missed our entry for this hour, right? But this is telling us, like when we can't return to the 5-9 box, that's telling you it's a sign of strength, just like an RTH gap that's 200 handles open, hint, hint, right? Happened recently. If we can't return to that, that's a huge sign of strength, right? Don't short those kind of markets, right? Unless you're targeting a specific reversion to the mean kind of trading strategy. Next hour opens, we're above previous hour mid, right? We anticipate this being tested along with the 5-9 box to find entry. Why is my 5-9 box not appearing? I have to draw the box now. This is your new 5-9 box, right? This is a test of previous hour mid. When in trending market, we're already 2 micros in. We're trying to add more. Remember, we have to engage 10 micros, right, for whatever this move is. All right, we can see rejection around the midpoint. We can see that it tested the previous hour mid, right? All signs of strength of continuation trend. Ah, damn it, I missed it right there. Now I'm gonna have to chase price and enter 2 more right there. Because when in trending market, right? These kind of trades usually happen on the daily chart, right? Intraday, like I can show you the numbers. Intraday, we range more than we trend. So if you can find a day like yesterday where it gave this phenomenon, and you can identify it, you have to trade it smartly, but you can't be afraid to add to it, and you definitely can't be shorting it until it shows a proper reversal. Tested the previous hour mid at the 5-9 box, stepping above the 5-9 box, and at points, if you test this enough, you're going to understand how to position at the low when it's at the low, at the mid when it's at the mid, at the high when it's at the mid. So we're going to add 2 more contracts. What the fuck? I said add 2 more. All right. Gave up the previous hour mid. Gave up the previous hour mid. So now it's time to start scaling out. Sell to. So whatever it did. Actually, I personally usually wait for the 5-9 in the box to develop. This is Globex session, but to be on the safer side, sell 2 of your contracts and start to give out. Like you got to be able to scale in and out in trending style markets, right? Couldn't take out previous hour low. Now we take out previous hour low. Immediate response. Remember, I told you immediate responses like that are a sign of strength, right? Right. When you see us do destruction on no matter what time frame and just completely give it up, right? That's giving you a signature that you need to pay attention to. We can add it back 2. Let's add back 2 more. Previous hour mid. And of course, my 5-9 box, I guess it's something to do with replay mode, right? We tested previous hour mid, rejected it. We have 2 more contracts to get in. At this point, it's been 5 hours. I have no interest in adding any more positions. At anything, my job is to get out of positions. But that's how you would trade a reversal, starting with a fourth of the contract. Actually, we started down here. Right here was the fourth of position. And then as the market proves to you through signs of strength, holding up previous hour mid, stepping above 5-9 box, you know, can't even get back to, like, you add 2 during those times, right? Right? And then you scale out the same way you saw me do, right? You don't just scale out because, oh, we've hit previous day highs or previous day's lows, right? Like yesterday was a good example of how to like properly do this, right? So if this is the 950, right? And we're scared, we already know by looking at how these hourlies do that the midpoints matter, right? So if we're scared, right? The best thing for you to do as a scared little trader who wants to get out of your position too early is mark out the previous H4 high and low. So when you get scared by this pullback, you can just look left and be like, oh, this isn't that scary. This is actually a sign of damn strength that we cannot even make it a 0.25% of the previous H4 candle without reversing. As a matter of fact, I'm going to add, right? So now, let's say here the 5-9 boxes told you clear as day, the hourly boxes, everything told you clear as day, hey, start scaling out of that position. Why? $10 o'clock low, 2 o'clock high. This is the previous H4 right here. Could we make it above the previous H4 highs? No. We sucked back into the range. And then what was the defining tail was this H4 midline. Hopefully this makes sense, guys and gals. Right? If this does not make sense, please let me know. But listen, the best thing you can do in trading, because I know I draw a lot of discretionary traders, right? I don't discretionary trade. I have systems like Captain Backtest and these different systems that I test, right? But if you're going to discretionary trade, I literally built this system for you to be successful. You just have to be the discipline. So listen, you have to be the disciplined one, and this is going to help you as a trader, to make the hours prove to you. So look, we're rejecting previous hour mid right here. We're going to step below and continue, right? These hourlies, I did that for a reason. You guys are so focused on these lower time frames, on the noisiest noise of the markets, that using these hours to make decisions around the 5-9 box and the previous hour mid, right, will help you develop that patience, right? Just like we do it on this chart for swing trading, right? And if you do it correctly, using NFP Friday and previous month 50%, you will start your fourth of the position here when we take out on the daily chart, when we take out previous month. Actually, no, that's not the one I want to show, but that's still a good example. Take out previous month 50% on the daily. Are we above NFP Friday? Yes, we are. Starter position, fourth of a contract, and so forth and so forth. But I actually took this swing position myself, and I know Oliver Kill did too. Right here, closed above previous month 50%. Now we have to wait for NFP Friday. NFP Friday. Think we missed 5-9 boxes. Right, we go higher. We step above it. We find support on it. We already, because we're above NFP Friday and previous month 50%, we expect the month to close higher. Right, same thing here. Test of previous hour mid, aka previous month mid, 5-9 box, NFP Friday, and you capture this whole move, and then you trade these exactly the same way you see us. You're just doing it on the 5-9 box. So if you can build the discipline, to do it on the hourly charts with your little prop firms, when you actually have money, right, whether it's enough money to trade 5 micros, right, you're going to be able to trade this kind of stuff, right? I wouldn't recommend doing it with a mini. I would recommend doing it the same exact way, because not all of us have large capital. Like Oliver Kill slung 35 minis during this whole move up, right, on NQ. I don't have that kind of capital laying around. But let's say on this day we started a swing position, right? And we just traded it just like the 5-9 boxes. And it's frozen. Yay. Trading view. Let's try it again. What the Oh, it's incorporating the day, right? Now you have the ability to let your capital work for you, and for you to not have to sit here in the noisiest part of the trading world, the intraday, and sit here and bare knuckle fist fight the fight, because you already understand the concept. how do I make this move faster? This is awful. And then you can swing trade it. Does that make sense? Hopefully this makes sense. Because guys, I tell you guys all the time, your job isn't to be a market guru. Your job isn't to be the most coolest dude on Twitter. Your job is to make money and to build systems that allow you to see the market for what it is, to see the market for what condition it's doing, and to trade that style of market, right? And that's the whole reason I built these 5-9 boxes for you guys, right? So you guys can practice a lot in your capital and go on to live your life, because in 40 years, we're all going to be dead. We're on our deathbed. Do you really want to look back on your deathbed and say, dude, I spent 12 hours a day looking at charts? No, like I missed out so many family opportunities, so many family dinners. I should have helped my kids with their homework. No, like that's how they suck you in, right? Once you build a savings account, you can deploy capital this way. You don't have to be in the equity space. You don't have to be selling, harvesting risk premium. You don't have to take these crazy, crazy things. You just have to be able to identify when the market's slowing down, when it's consolidating. You just don't trade, right? You don't trade, right? Every year, you get 2 to 3 good moves month over month, right? If you're in a bearish market, it'll be obvious, right? I would never recommend trading this. Go pick up a part-time job or trade intraday, right? But every year you draw out the monthly charts in the NFP Fridays, right? What boxes? These ones, I just drew these out. Or are you talking about the 5-9 boxes? These ones, they're part of my annual my $8 a month Substack, right? I charge you $8 a month to get access to this and to my levels every day, which I give for free every day on these YouTube videos, right? All right, so now that you know what the higher intent is, right? We know that this is the historical data. This is the highest probable trade based off of our analysis, right? This is the live price. You wait for live price to confirm. Like right now, we're seeing if live price can confirm structure stat 1 being the reversal point. Right now, it's giving signatures, like it took out that structure stat 1, it stepped above the 5-9 box, found footing at the 50%, but ultimately, for this to be a reversal, we have to take out previous hour mid, and then the next hour, the 7 o'clock hour, needs to be above this hour mid, step below, test it, step above 5-9 box, find support and up. All right? Because it can always drop to the next statistic, which is a 95% statistic for the rest of the day, right? So you have to, doing trading this way will make you, it will remove FOMO, it will remove fear, it will remove all that stuff. It will remove, what's it called when you learn too much stuff and it gets fucking, guys, NFP Friday, like, what do you mean, does it come with a vet? No, like, these are hand drawn out, right? Like, they're hand drawn out. These are hand drawn out fibs, right? And you know what's crazy? You guys traded this whole market. You traded intraday, traded this whole market. And using this concept, this was kind of sketchy, but you got to pay attention to the daily closes. Remember, I say the previous hour mid, it has to have a daily close. This did not come with a daily close at all. All right. All right. With that being said, I'm going to cut it. And yeah. All right. You guys are good. Wait, does the NFP Friday setup come with a vet? Or it comes? I don't understand that question, Michael. NFP Friday is NFP Friday, right? Like, it's the first step of our process, and I do it every morning. Are we above previous month 50%, which is this red line? And are we above this month's NFP Friday? If we are, we expect it in the month closer. Like so, on this day, we said we're going to close the month above this month's high. All right. We expect it to find the low of the day between 5 o'clock and 11 o'clock from a statistical standpoint, right? Like next month when it opens, we expect it to come and test this midpoint. If it can't even do that, and then NFP Friday we get above it, we expect for that month to close higher. Like there's no strategy to this, right? I can go over the strategy and how we do it, right? Right, which I thought I just did, right? So we're in a seasonality ranging market, right? In November, we break out of that seasonality. The first confirmation of that was when we got a daily close, or the alert of that was when we got the daily close above previous month 50%. Now we have to sit on our hands and we can't make a decision yet because we have to wait for NFP Friday, which is this day, November 3rd, to happen. And then the Monday, can we close above that? Yes, we can. So now we look for the low of the day scenarios between 5 and 11, right? And we expect the month to end higher, right? Remember this, right? This is why we do the weekly step, right? This is that month, right? So we overextended 4.74, right, for the month, right? So now we know we have to slow down and use a constant variable, this red line, even on the weekly chart, and we have to let everything catch up. And if Friday happens, right, now we can expect it to displace higher, right? Why? Because this was November. This is that slowdown period I just showed you on the weekly chart, right? We can't get below previous month 50%. And if Friday happens, what do we do that Monday? We close higher. We expect the monthly close to be higher. Boom. What do? Going back to the weekly chart, right? Now, for this month, from the constant variable, we overextended 3.71, and if we incorporate this, 4.24. We expect a slowdown, right? It needs to slow down and catch up, and we wait for NFP Friday to see, which is, this was the second month, so this was a slowdown. This is where we're testing previous month 50%. Guess what? We can't close below it. We wait for the NFP Friday, which was a doji. Monday happens. We close above it. We expect the month to close higher, right? Once we get towards the end of the month, we go back to our weekly chart, which is right here. We extend it from the constant variable, 3.44. We let it slow down. Okay, as long as you understand. All right, trader notes, heads up. Replay mode is slow as shit for a higher time frame. Even with it, only way is to manually click button for it to speed it up to your liking. Oh, thanks, trader note. Analysis paralysis. G-man, this is the word I was looking for, right? You want simplicity in your life. You want stress-free trading in your life. You can't get that with 90% of the gurus. Even what I do, right? Even though it seems simple, right? We have all these statistical probabilities, right? And you guys see me do it. It takes me about 10 minutes each asset to do this, right? But then I have the live price component, right? This is a very complex system. This is still very, very complex and not ideal. But because we're operating in an intraday, which is the noisiest part, we don't get the luxury of swing trading. Well, I do. I don't know about you guys. Where like if you're a swing trader on the higher time frame, you only need previous month 50% NFP Friday. I just showed you that to make proper decisions around your trades, right? You can use EMAs, right? They capture the trend just fine. Or is the green EMA, which is a higher time frame EMA, up and to the right? Are we above it or below it? If we're above it, we wait for the slowdown period that I just explained to you. You go to my Substack, which is, let me see. So you go to Substack, right here, and it's the Captain's Time, sponsored by Vet-Owned Pack Trade Group, right? I don't know how to share the link or anything like that. It's on my Twitter. Just go to my Twitter. All right. So what I want you guys to really think about, right? I love the fact that you're intraday trading, right? Take it from a dude who works in the professional space for a sell-side organization, right? This is the noisiest part, and no, it has nothing to do with stops and take profits and liquidity like that. There's plenty of liquidity. It's in NASDAQ, right? There's a workflow process between the executing broker, the clearing broker, and the prime broker and collateral margin that happens across 42 economies. It's going to be the noisiest part, right? But always save up. Save up your money, right? Save up your money so you can come swing trade stress-free like this, right? I just gave you a really powerful system that incorporates a lot more than you see, right? Let's talk about on the declines, right? Let's start with this decline real quick, right? So we see that when we're swiping back in NFP Friday, right, that's the market telling us the sign of strength is disappearing, is vanishing. This market's starting to slow down and get weaker, right? And it just conveniently happens to happen around seasonality times. Right here, we close below the previous month 50%. What are our expectations? That the market's going to crash and burn in the 42 different economies in every insurance, every pension fund, every public company is just going to crash and burn and it's the end of the world? No. No. We just take the same steps that we would as if it was intraday and we're looking for the low of the day, right? Except for when we close below NFP Friday right here on this day, what do? 20, like 10, 20. Where's the quarterly lows at? Quarterly lows are right here, right? Is there something significant about quarterly lows? No, they're just cheap. They're cheap in every hedge fund, every pricing algo, every investment banks. This means, hey, prices on discount like crazy. We're going to buy it to crap up because we're not going to get this opportunity, right? Same with here, right? We get below NFP Friday. Now we have to wait for a close below NFP previous month 50%. That happens here. What do? We target quarterly lows right here. Why is this off? We got down to it. Holy cow. By one tick. Holy cow. By a couple ticks. Buy it up. And for us to be swing traders, we have to be disciplined, right? We are stuck in limbo land right here. We were above previous month NFP Friday, but we were still below NFP previous month 50%. We had to wait for the right market condition. That right market condition happened on September 11th. Go figure. All right, because we closed above previous month 50% and we closed above NFP Friday, and we're still, this wasn't the cleanest delivery, but we still met those two criteria, so we still put on our positions to swing trade higher, to expect for the month to close higher, and now we'll pay attention to the next month. And this all syncs together with, that's why you have me looking at this chart right here. We are currently above the 2.5 to the 5% range, so we know that this is so next week is the last trading week of the month, right? So we can expect a slowdown, just like we've seen so many other fourth weeks of the month. All right, Captain, does NFP Friday and last month midpoint work in other future markets too? Thank you. If they're trending markets, yeah. If they're ranging markets like crude oil, sure. Gold, yeah. I mean, a trending system is a trending system that works in every market because you're defining how to make decisions around that trending system, right? So definitely go check. Like I trade NQ for a swing trading strategy for parts of my portfolios just because it's a signature of growth of the economy and I expect the economy to grow, right? But yeah, like go check it out and check out how you can do it in a range bound market like crude oil, right? see if it works. But I do have to jump off here, and my daughter, got to wake up my daughter and write the newsletter.